Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, March 27th, 2020. And here are our top stories. An historic $2 trillion stimulus bill clears the Senate, and the pandemic threatens billions of dollars of credit card losses. Well, joining me now is Devin Banerjee. He is the Senior Financial Services Editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter that you can find on the LinkedIn platform. Devin, welcome back to the program.
Thanks so much for having me, Jeff.
Well, it's always great to see you, and I see you've changed locations within your home. How's everything going, working out of your home?
Just trying to mix things up a little bit, keep it fresh. And we're now into week 2, actually about 2.5 for my wife and me of working from home here in San Francisco. So trying to keep it together.
Absolutely. Well, I think you're doing a great job, and I follow you and the team on the platform. Amazing work. So let's talk about this stimulus package that, as of this recording, has been agreed upon, but we don't know if it will pass. But let's assume it's going to pass. What are some of the things that we need to know about this bill?
Yeah, that's right. So full disclosure, as you said, we're filming this on Wednesday of this week. The stimulus bill is moved, I won't say through the Senate, into the Senate, and is hopefully close to an agreement there. But I just want to recap some of the 5 things you really should take away from this bill. And actually, before I get into that, just some context. I mean, this is the largest economic stimulus measure in modern history. If you think about the last crisis, TARP, you might remember, that was about a $700 billion authorization that actually, after Dodd-Frank, went down to about $475 billion. In this package, we're talking about a $2 to $2.5 trillion relief package. So here are 5 things that really everyone can take away from this package if and when it gets passed. The first is these direct payments to Americans. So in the bill is $1,200 in direct payments to taxpayers with incomes up to $75,000 annual incomes, and then it phases a bit lower up to those with $99,000 in annual income. Number 2, a significant expansion of unemployment benefits, so jobless insurance up to a 13-week period. A 4-month enhancement of the other benefits. At the urging of Democrats, this was also broadened to include freelancers, to include people being furloughed but not laid off, and also to include some gig workers. Think about your Uber driver or your Lyft driver. Number 3, of course, federally guaranteed loans to small businesses. This has been really important. But a really important caveat or condition on that is federally guaranteed loans to small businesses that pledge to retain their workers. This was a really important negotiation point. And these loans will actually be forgiven if workers are paid by these businesses throughout the crisis. An interesting bipartisan source of support there was Marco Rubio, the Republican senator from Florida, who worked with Democrats on that provision. Number 4, a $500 billion corporate bailout package. This would be in large part, about $425 billion administered by the Federal Reserve, and then $75 billion in industry-targeted relief, so airlines, hotel companies, et cetera. And some sticking points there in terms of that Democrats really pushed for. So, immediate disclosure of who the recipients of these loans would be. That was really important, and also stronger oversight, a congressionally appointed oversight board to administer the loans from that fund. Also, stock buybacks will be forbidden to the recipients of these loans during the period of the assistance, as well as a year after those recipients receive these loans. Another really important point. And the last one I'll mention, Jeff, which is important, about $100 billion in relief for hospitals and health systems nationwide, as well as billions more for protective equipment. We've seen a huge shortage in that, as well as testing equipment, another really important shortage there. So, it's interesting. All the points I mentioned at the start are around, the state of businesses and their balance sheets. And then kind of that last one points to the actual health crisis that this is, and not so much a financial crisis. So a lot of people are making that point that, these measures are great, but they should probably be larger. Some really smart people coming out and calling for up to $4 trillion in relief instead of $2. And then a lot of people making the point, look, this is all great, but at the end of the day, it's a health crisis we're in, and we need to keep the focus on the health measures that are being put in place by agencies like the CDC, et cetera.
Thanks, Devin. I think you and I watch the markets on a regular basis. I don't watch it hour to hour, but yesterday when this bill was announced that there was people working together, we saw the Dow jump. I think the greatest increase ever in history. I think, and then today, before I came into the studio to talk with you, saw that the Dow was up considerably as well. So clearly the market has responded positively. But Devin, let me ask you, what's been the reaction of people on the platform? Because I'm really concerned about, and not necessarily the corporate people, I'm concerned about the 600 million, 700 million users and what people here in the States are saying.
Yeah, so a lot of what I just mentioned, which is this isn't enough. This can provide a couple months of relief and runway for a lot of small businesses, but the hit for them could extend much longer. Also, the predictions of unemployment. There's some really stark and kind of scary forecasts coming out. The one that's going around a lot is from James Bullard, the president of the St. Louis Federal Reserve, who expects unemployment to rise to as high as 30% in the second quarter. That would really, put a very deep dent in Americans' pockets, and a $1,200 check will certainly not provide the relief necessary. And so, a lot of people saying it's not enough. A lot of people confused on the LinkedIn. A lot of small business owners and operators confused as to how to apply for this relief, when it will come. All of that will basically make up the discussion, I think, in the coming weeks. So a lot of people are they're watching the news like you and I are, and they're listening to takeaways like the ones I just went through on the list, but they don't really know how to take advantage of it themselves or how it will affect them. And they need that relief quite immediately. Those direct payments are expected to be rolled out over the months of April and May. As I said, if people have lost their jobs already in the past few weeks, that relief will be too little and too late, probably.
Yeah, and I know some of the unemployment websites to file for unemployment. I mean, there have been lockups, people freezing, people not being able to access. I would imagine the same when information's pushed out about applying for this economic recovery loan or whatever you want to call it from the Small Business Administration or whoever's going to, what area of the bureaucracy is going to run it. That website's going to be freeze as well. I mean, look, I think these are probably necessary steps. And I know in the second segment, we're going to talk about debt. I can't wait to get into that conversation with you, Devin. But it seems like the federal government needed to act. It looks like it's acted. We've got some measures that are agreed upon. And I guess we're going to have to let this thing run its course. And I also want to commend you and the LinkedIn team, Devin. I don't know if the listeners, viewers are aware of this, but you guys have a coronavirus news feed that you've added.
Yeah.
I think it was as of a week and a half, 2 weeks ago, where you can get all the latest news. So that's, I think, also a plus as well. So you can track the stimulus and you can also track the coronavirus news all in one spot.
Yeah, that's absolutely correct. At the top right of your LinkedIn home feed, it's a special module we've created with coronavirus news. And we've really raised the bar as high as we can to curate that news and information coming from just the most authoritative, trustworthy sources. So all the health news is coming directly from the CDC, the World Health Organization, et cetera. Other information is coming directly from the Federal Reserve, and we're asking experts to weigh in with their own advice on this. And so a lot of them are helping, for example, these small businesses think about how to apply. We had one small business owner, I think a couple of days ago, post a screenshot of an attempt at applying where the website crashed on the Small Business Administration site. And then the next best avenue for him was to fax an application, but of course he doesn't have a fax machine at home. Who does anymore? So a lot of outdated systems and infrastructure there.
Yeah, absolutely. Well, Devin, I want to hold you over for another segment, as always. When we come back, we're going to talk about debt and consumer debt, federal debt. We're just going to talk about debt. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back to our This Week in Friday episode, and we're joined, of course, by Devin Banerjee. He's a senior financial services editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter. Devin, thanks so much for sticking around this morning.
Absolutely, Jeff. Happy to.
And I like the fact that you move around, although there are probably some places in your house that or condo that we probably should not shoot from, but I'll leave that up to your discretion. So we talked about the stimulus bill, and kind of going into this, I mean, we have talked repeatedly, Devin, about debt, whether it's student loan debt or consumer debt. But why don't you weigh in here? I mean, we talked before in the first segment about debt, perhaps from the stimulus, but take it away.
Yeah, absolutely. A lot of members on LinkedIn are starting to look a bit forward and think past this potential stimulus and realize that the consumer debt bubble, if you will, just the volume of consumer debt out there is really going to just drill a huge hole right through households' finances going forward. So if you look at consumer debt, a lot of people are hearkening back to 2008, that crisis when the biggest, for example, credit card lenders were just inundated with calls, waves of calls from everyday borrowers seeking relief. And we're starting to see that again now as unemployment really unfortunately starts to tick up during this pandemic and amid all of the business closures. And a lot of people are pointing out, look, the correlation between the American jobless rate and the ability of Americans to pay off their credit cards are very closely correlated. So in 2009, when unemployment topped 10% during that recession, U.S. credit card lenders had to write off, I think, about $90 billion in sour debt. And as I just mentioned in the last segment, some forecasts for unemployment around this recession are going up to as much as 30%. That was from James Bullard of the St. Louis Fed. So, proportionally, that could amount to a lot more of sour debt for these credit card lenders. So credit card balances at the end of 2019, just a couple months ago, stood at a record $930 billion. Some of the biggest credit card lenders, JP Morgan, Citigroup, Bank of America, for each of those that I just mentioned, about 15% of revenue comes from their credit card businesses. So quite exposed there. Some that are even more exposed, Amex, for example, American Express, recently just scrapped all of its 2020 profit forecast for the year because of this impact. And then there are some that are aligned very closely with retailers and small businesses, branded cards that are quite reliant on activity at retailers. So JP Morgan is one of them, Capital One, Discover, for example, Synchrony. So these are among the banks with big portfolios of cards tied to retailers. We're already seeing them take a really big hit. Synchrony and Discover, their shares, their public stocks are down about 60%, 60 year to date. They're among the worst performers in the financial index. So a lot of people are looking kind of forward past this relief, past the stimulus that we talked about in the last segment, which yes, may provide relief for a couple months, but a lot of this is kind of amend and extend, as people say in finance. And I think we talked last week a bit about some of the relief measures coming directly from banks, for example, around auto loans, around home loans or mortgages. Bank of America really led the way in the U.S. on that front, allowing borrowers to apply to defer payments on their mortgages, for example. But as I said, it's just amending and extending. Those payments are deferred. They're not forgiven. They're just added to the end of the loan. And depending on how long this takes and the hit that consumers and household wallets take, it's basically kicking the can down the road, unfortunately.
And let's not forget student loan debt, $1.6 trillion. We've covered, you and I have talked about this and others ad nauseum for the last 2 years. I think it's an important topic. We got to keep talking about it. So no joke, all jokes aside. But I think that interest payments on student loans are being forgiven for at least 2 months, if I'm not mistaken. That's going to have an impact on those lenders and those service agents who provide services there. Devin, I just think that yes, debt, consumer debt, and the impact, it's going to hit this hits every area of our economy. And I think we all know that. I think we need to be prepared expectation-wise for that contraction in terms of GDP and the potential for unemployment, even though we're incentivizing businesses who take this bailout money to not let people go. But there are already small businesses who have let people go.
Yeah, of course. And to your point, I think it's really important. This showcases that just how interconnected everything in the economy has become. People are now looking to, kind of a real estate crisis, at least a commercial real estate crisis in terms of the retail carnage, and those businesses unable to just pay rent to commercial real estate owners. And now people looking at the effects on housing and the housing market really taking a blow. So everything is really connected, in the economy. It also really showcases the importance, in my opinion, of studying cycles, debt cycles, and just how much debt is taken on during certain parts of the cycle without a lot of regard for what happens when that cycle turns. And so there's some really smart minds on this topic. Howard Marks of Oak Tree Capital, who studies cycles really closely. Ray Dalio of Bridgewater, who has published a lot on LinkedIn, as a matter of fact, about his study of debt cycles and how history and memories are very short, and a lot of people don't study, history well enough. And when the good times are rolling, everyone's at the punch bowl, and they don't think about what happens if and when, and it always is when, the next crisis occurs.
Yeah, and I didn't even bring up the municipal bond market, which has been significantly impacted, and we don't have too much time to go into that. Well, Devin, I'm still optimistic. We'll get through this, and we're going to see contraction. I think people just need to wake up to that and be aware of that from a business perspective, from an economic perspective. But we'll support each other. That's what we do here in the United States of America. Devin, always a pleasure talking with you. Thanks for joining us, and stay safe where you are.
Thanks, Jeff. You too.
And that wraps up this episode of BRN AM. But we're not done for the week, because tomorrow, Saturday, we've got our weekly retrospective show, BRN Weekly, and we have a very special guest as well. You're not going to want to miss it. Don't forget, for all your news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, stay safe, and don't forget, roll with the change.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline, and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.